All right, welcome back to Halftime. Credit Suisse upgrading Netflix shares to outperform despite the negative performance of the stock year to date, down about 2%. The bank says it expects subscriber growth to normalize and that its recent consumer survey reinforced Netflix's strong competitive position. It's our call of the day. Brenda, I'm going to turn to you first. Here's one of the results of the survey. 91% of users said they're satisfied with Netflix, a higher rate than any other streaming service. I don't know about you guys. Surveys are great, but I vote with my wallet. We're seeing tremendous subscriber growth for Disney Plus and also Amazon Prime subscription increases over the last few years. I know people buy it for the shipping, but they also have TV where you can get a lot of the other networks. Do you really believe that Netflix has this strong of a competitive position?
You know, I think there's room for a lot of strong competitors in this marketplace. You know, we've all been spoiled, honestly, with lots of great content over the last year and options within the streaming space. Our preference would be Disney over Netflix as a stock, but I still think, you know, there's certainly a place in the market for Netflix and Disney to coexist with one another. We really prefer Disney because if you look at how Netflix is valued based on a per subscriber basis, if you pick apart Disney, it appears the direct-to-consumer business is still being undervalued relative to Netflix, and we don't think that's necessarily the way it should be. So we still think there's a lot of upside to Disney and really like the diversification of the revenue stream there, all the, you know, incredible content that they've been amassing over many, many years, and just how powerful that is, especially with children who are willing to watch the same content over and over again. So our preference would be Disney, but we absolutely think there's a place in the market for Netflix as well.
You know, Brenda, I might be a big kid. I'm really enjoying that Loki show, the Falcon show. I'm the Mandalorian, so maybe I'm one of those kids that's watching the same thing over and over again. Pete, you keep talking to me about Netflix. You've been watching Bridgerton over and over again. I know you keep telling me about it. I haven't seen it quite yet. On a serious note, Netflix has a lot, but they don't have live sports. So you see Hulu has live sports. You see the commercials everywhere. Amazon Prime has football. Are you concerned at all? Paramount Plus actually has football as well. Are you concerned at all that Netflix doesn't have that exposure to pro sports?
I'm not necessarily concerned about it, but that would seem like a layup for them to actually get into sports and the broadcasting across that with their subscription model that they've got. They have incredible content, though, Frank. You and I both know that. All these different streaming services have their pros and their cons. But in some ways, I look at Netflix the way I looked at Apple back in the day when people were talking about the iPhone and everybody trying to compare to the iPhone and they're trying to figure out what's the best. Satisfaction. And what people like is when they want something, they get something, and they are very, very satisfied. Obviously, with the Netflix model and the content and everything that they've got a huge second half of the year in terms of content coming, in terms of what they think is going to be really big for the company. So I look at it and I look at Disney and I think to myself, wow, Disney from a PE perspective is not that far off of where Netflix is right now. Both of them have great cash flow generation and everything else. But I actually think right now from here to the end of the year, I think Netflix can definitely outperform Disney.
Jim, you got broadband out there on the farm? You get Netflix out there?
So we got to use the satellite there, Frank. We really got to use satellite. Hey, you know, listen, I want to add my thoughts here. Netflix is fine, but you got to ask yourself, in this broad landscape of the streaming wars, where is the value? And I'm going to submit to you that Netflix is not the top of the value chain. Disney, which we're talking about a lot, you know, has not only the streaming, but it has the theme parks, it has the studios. So that's a multi-piston engine, particularly where the theme parks are coming back right now. I see value in those shares at this price that I don't see in Netflix. Frank, let me make one other point. You brought up Paramount Plus. I own Viacom, and I will tell you that Viacom is not getting the respect it deserves. They have about 40 million paying subscribers to their streaming services, including Paramount Plus. They have another 60 million in Pluto TV. And those numbers are large enough that the company should be getting a lot more respect than it is. And if it doesn't get that respect, that's why you're seeing chatter this week about Comcast mulling over making a pass at them, making an acquisition there. If not Comcast, somebody else will. So Viacom is the sort of name I see much more value than Netflix.
Yeah, Viacom getting a lot of respect today, up almost 2%. Kevin, I'm going to turn things over to you. Netflix shares down about 2% for the year, but up about 5% over the last month. Is it still a buying opportunity?
Yeah, I think if you're going to play the streaming and the media space, you have to have an allocation to Netflix. There's no question. But I love the Spielberg announcement. It shows that, you know, the The big legacy names are now going there to produce their blockbusters. I mean, it's become the platform for talented producers. When people shop deals, they want to go to Netflix first. And so, that gives them, for the long term, great content. A comment I want to make about Disney, which I think is intriguing. Disney for almost a year and a half traded its streaming business at the multiple its legacy business had. So kind of 20-ish. And slowly, over the last 12 months, it's done a shift. It's almost like a thermocline change. People are willing to trade the legacy business that's streaming multiples now. So they must feel that content, that old legacy content, is now going to be fed on a streaming platform. And I think you have to give credit to whom for that? Iger. He was the architect of all this, didn't really get all the credit for it to make this stock practically double after he's gone. But he was the guy that set all this up, and he took the big bet. He thought one day they'd flip that PE, and they'd get to call Mickey Mouse Land or Disneyland, whatever you want to call it. You're going to pay a streaming multiple for that. And that's just a theme park. I think it's sheer genius.
Kevin, you call it Mickey Mouse Land up in Canada? Never heard of that. All right.